Hello traders, thank you for watching the CCI Reloaded Part 1, Part 2 and Part 3. This is CCI Reloaded Part 4. If you have not watched Part 1 to Part 3, you may do so before watching this. In this video, we will discuss a bullish divergence and bearish divergence when we are using the CCI indicator. Let's get started. This is CCI Reloaded Part 4. For those of you who are new to us, we are the TSTW S008 traders, TS CCI Pro traders. Alright, this video is for educational purposes only. It's neither a solicitation or an offer to buy or sell any financial instrument. It is primarily for the TS CCI Pro traders and the TSTW S008 traders. We will discuss bullish and bearish divergence, okay? We are looking at the stock, Epic NI, November India, Epic November India, NI source, a stock that we have, analyzed before in the past, and we told traders that as long as the price is below the level of 2500, we will give priority to sell signal. If the price returns above the level of 2500, we need to be very cautious, okay? All right, because on this chart we have a V pattern, letter V, the letter V, V for Victor. We have a V pattern. If you can see, I would, color it in pink, so, you can see clearly here. Okay, this is a V pattern. Okay, talking about a chart pattern, the V pattern, letter V, V for Victor. It's a V pattern. The price is at a conversion zone or a target zone. The bull that we're buying here will be willing to take some profit. They were in this trade since 2009 up to this point in time. The S&P 500, talking about the trading triangle, is at a resistance level. If we want to buy, ladies and gentlemen, do not assume anything. If we want to buy, we will prefer the price to break above the level of 2500 to retest the level of 2500. Okay, and if you receive a buy signal at that retest point, we will give it a chance. But I will not be part of that. Okay, I want to give priority to sell signal in this zone, but we are trading first the market before anything else. If the market is going up, this stock will follow the market because it's positively correlated to the S&P 500. Okay, so attention to the market. When one is trading this stock, one cannot afford to disregard the trading triangle when one is trading NI source. Okay, all right. So we see a V pattern. This is a convergent point. Okay, a target zone. If we receive a sell signal here, we will take it. In the previous video that I posted, a few months ago about this stock, we were talking about this trend line, a common sense trend line, a trend line that we draw along the price, okay? We didn't join 2 point, we just draw a line along the price. That common sense trend line was broken here and retested at this point. You see this point? The pink line, if I stand it now, you can see that the common sense trend line was broken, deep below it, and retested here. Price went down for 1, 2, 3, 4, 5 weeks. Okay, if you were doing that, if you pay attention to the language of the price, for 5 weeks, the price went down to the lower bound of Bollinger Band 21. And now, because the small man is very upset, they say this is not gorgeous, okay? They move the trend line because it depends how some traders draw their line. Okay, those who draw their trend line like this say, no, this is not the best retest point. This is the best one. So the price did below now, this trend line, because you can see that move it down. So now in retesting it here, this is again on the edge. If we receive a sell signal here, we will take it. We will not force our intention or our excitement to sell on the price. We will pay attention to the market first and take a valid signal. If the signal has changed, the music must change. Okay, talking about divergence, bullish divergence and bearish divergence, we can see that the CCI 21, on this weekly chart for the NI source is displaying a lower high, a bearish indication. The CCI is becoming bearish. Doesn't mean that the price is bearish. During that time, as the CCI was giving us the bearish indication, the price itself was still going up steadily, but you can see that the progression was very, very slow, was not like a dynamic as we will expect it. It was carefully, okay, going up, okay, you see. But the CCI was displaying a bearish warning. This anytime we see a bearish divergence, because the CCI was going down, displaying lower highs, as the price was still in a rising channel. Remember the three things that the price is doing all the time. I don't want to remove my previous line. I will remove them later, because all these lines we draw them before when we were posting 2 videos on YouTube before. So the price was in a rising channel, but the CCI was in a declining channel. Okay, was in a declining channel. So this is a bearish divergence. A bearish divergence. We will wait for the price itself to give us a clear-cut signal, which means the price must pop out of the bullish channel and retest the bullish channel right here. Doesn't mean that we will just place a trade here to sell. If we receive a signal to sell here, we will sell. The point I want to make, whenever we see a bearish divergence, you can see that the bearish divergence was taking place for a long time. Here, traders were noticing at this point in time, okay, at the end of 2011, the bearish divergence was in place, but the price didn't go down, was still above a rising pink trend line. You see, it's above the bullish trend line. Traders very often, whenever they see a bearish divergence, they just place a trade to sell and they lose. You can see that sometimes the price went down and then quickly change direction. Went down, quick change direction. But if you pay attention to the price pattern, you can see that the price displayed, in fact, I posted this before. I don't want to talk too long about it. It was A, B, C, D chart pattern. This is a A, B, C, D chart pattern to this level. This is a convergent point. Okay, we will talk about that. And again, another A, B, C, D to the same zone. This is a target point. We are at a target zone. When we see a bearish, okay, divergence or a bullish divergence at the target zone, this is a high probability trade. Does not mean that the price will definitely go down or go up, but we want to watch it, okay? We are now at a convergent point, okay, because we are at a target zone, okay? Though the CCI was giving us a bearish divergence here, okay, was not at this point. Let me show you one here. There was one before in this zone. Okay, this was not too bad, because if I draw another horizontal line, okay, this is for new traders, okay, I will remove my line later on, but now I'll keep them like this, so my apology for that. Okay, I have a reason why I'm doing that. So you can see that when we were here in this zone, you can see this is a key level, okay, price went below it, price came back to this level, trader will look for opportunity to sell here. At that point in time, the CCI was overbought, but we want to receive a signal to buy. So at this point in time, as long as the price remains below the red line, we will give priority to sell signal. But you can see that the price went down below the red horizontal line, but quickly went above it to find a support and continue the movement to the upside. At that point in time, we know straight away that the smart money does not want to sell here. They will prefer to sell at this level. But that, okay, we will see. If you receive a sell signal here, we will take it. But you can see that the bearish divergence was taking place for a long time. So if you were just selling because of the bearish divergence, if you were just trading the indicator instead of trading the price, you will make a wrong decision, because the price was still in a rising channel. Okay, you see, the same thing we were seeing all the time, 3 channel, okay. So though the CCI was in a bearish channel, the price was in a rising channel, we want to, before we can sell, the price must come out of the bullish channel. Now it came out, it's testing here. If you receive a sell signal here, we will give it a chance. If the price is going down, do not ignore the support levels. Do not ignore the support levels. Okay? Alright? Do not ignore the support level. Alright? But the level we want traders to remember is 2500. As long as the price is above 2500, do not be aggressively bearish. Okay? Alright, this is about a bearish divergence. When we see a bearish divergence, the price must break below the bullish channel and retest the bullish channel before we can sell. The bearish divergence will take place very often in the fifth area wave, sometimes even in the first wave and the third wave. When the first area wave is dynamically bullish, okay, break out fast, you may see a bearish divergence. Trader will start selling. The price will retrace back down, giving us, okay, the second area wave. Okay, this is another matter. Okay, and you don't want to, okay, sell at the beginning of a bullish cycle. Okay, and you don't want to buy at the beginning of a bearish cycle. You want to know where you are, okay, at the target zone. This was a target zone. The bear that was selling, A, B, C, D, chart pattern, www.stochasticmarket.com. Here, what do we see? We see a bullish divergence, a low and a higher low. The CCI will display a higher low, but the price will display a lower high, a lower low. Okay, price was going down when the CCI was giving, okay, a higher low. This is a beautiful signal. Why? Because this is a convergent point. You want to know about convergent signal? Check our website. Convergent signal. Okay, the price has formed ABCD, a chart pattern, not ABC. Chart pattern. Okay, ABCD delta. And this is what we call delta zone, and we have a bullish divergence at a convergent point at a delta zone. We want to look for opportunity to buy. If you receive a signal to buy, we will take it. So we see the bullish divergence. We say, aha. Same thing we have done for oversold. We can perfectly wait and wait for the first higher low. You understand? If it's truly bullish, all right, we will see higher lows. If you don't see on this time frame, you will see on another time frame, the price will give you a higher low if it's going up. There was a higher low on this weekly chart for NI source at this point in time. After a bullish divergence, the price give the first higher low. I will be happy to take part into this. I do not just buy. This is the setup. We wait the signal and then the low risk entry point. Trading like professional traders, paying attention to the price itself and the market itself. Okay, do not forget the market pattern. There was a bearish channel. Price came out of the bearish channel and tried to retest it here. All right, you see now? So here we see a bearish divergence. We just wait for the price to give us the first lower high. So you can now just put this on your watch list and wait for the first lower high. This is equal high here. You may just wait for the first lower high. All right? But here you break below. It tests. Traders are challenging the price as I'm speaking to you now. You want to take signal and manage the trade. Okay, so we see this is a bullish divergence at a convergent point. These are high probability trade when we see a bullish divergence or bearish divergence at a convergent point, talking about convergent signal. Here, this is another bullish divergence here. You can see CCI displaying higher lows, higher lows, higher lows. But during that time, the price was displaying, okay, lower highs and lower lows in this session here. Okay, if you are not sure, I'll show you. We are talking about this zone, okay? And we are talking about this zone for the CCI. Okay, you see here? All right? So traders will say this is bullish. It's a bullish warning. It's not a bullish signal. It's a bullish warning. It's a setup. If you do not receive a signal to buy, you will not buy. And if you receive a signal to buy and the signal fail, you will come out. Because if it's truly bullish, the signal shouldn't fail. All right? Okay? Well, I'm talking like this to get your attention. So you know me already. So if you are a new trader, I don't think that I'm trying to patronize you. Okay? All right? Okay? It makes sense? And it's also powerful. All right? Okay? So those who are willing to trade, okay, will find that useful. Those who are looking for magic formulas will be very, very disappointed. Like I say to, as I say to traders all the time, okay? So though we have a bearish, here, this is a bullish divergence, my apology, I'm getting tired now, it's nearly midnight in London, so my apology for that. So though we have a bullish divergence here, the price, so you see a bullish divergence, you can do exactly the same thing, put your warning line, there's one already here, in fact I'll color in blue now so you can see clearly. So when you see the bullish, you put your warning line, it's a bullish divergence. Okay, if it's truly bullish divergence, the price shouldn't come below the blue line. Okay, so put your warning line. The warning line are a very useful tool when you are using any oscillator. So you will put your warning line there and say, all right, it's truly bullish, shouldn't go below it. Okay, so now you want to give priority to buy a signal because you see a bullish divergence here. All right, so you also look for on your left hand side, it's a support zone. There's a support in this. You can't see, but there's a support here when I'm moving my cursor here. But there was a support here. This low support here was broken. You pay attention to the red line. That support, two support, very good support here, and again here was taken down. He tested when above it, down, down. There are sellers here. Be careful. Now you see a bullish divergence. You need to be very careful. A support level was taken out. If you want to be truly bullish, you prefer to buy above the red line instead, because these were the prior, okay? This is in fact a previous valid support level. A support level retested and validated as a valid support level. The red line is a valid support level. Now a valid support level is taken out. I would prefer to buy above the valid support level. But there is a support here. You need to be very careful because you know that in this session there are bear, because a valid support level is broken down and the price retesting it. There were sellers here, and though we see a bullish divergence, is when the indicator is going up and the price going down. This is a bullish divergence. On the other hand, if the indicator is going down but the price going up, that's a bearish divergence. So we have here a bullish divergence because the indicator is rising and the price going down. Traders are willing to buy here, but we do not buy anyhow. We wait for a signal. They set up the signal at the entry point. Aggressive traders lost a lot of money here if they don't manage the trade carefully. You see? So though we see a bullish divergence here, look, down. The distance from C to D very often will be equal to the distance from, okay, A to B, or even longer, okay? So this, you don't want to trade the indicator, you want to trade the price. Draw your lines, draw your trade lines, and make excellent decision, okay? All right, you see now? There was another one here, you see? The CCI was in overbought zone, displaying a lower high, okay? It's displaying a bearish momentum. It's going down. Pay attention to this one. If you like, I can color it in a different color so you can see it, so we can avoid put it in turquoise. You see? But look, in this session, okay, if you like, we can highlight it again so you can see it, okay? We are here, okay? All right, easy. Am I lying? Okay, we are in the zone. All right, the zone. So there was this top. Pay attention to the vertical line. Follow the CCI here. Okay, I can draw another one. A high and a lower high. CCI is bearish, and the price itself was bullish. Display a higher low, a higher high here. It's a higher high in this session. Traders will look for opportunity to sell here. This is a good one, not bad, because you see, this blue support level was taken down, price D below it, and now we are now retesting it here. And also, this is the language of the price. D below the blue support level, now we are retesting it here. Those who were buying here, were buying from this point, this divergence here, this bullish divergence here, will be prepared to take some profit because they know that some bear will try to challenge them here, break below, retest. So they will be willing to take profits here. This is a convergent point, and we see a bearish divergence here. I will be willing to sell here too. All right, price went down, you see, looking for another support level, came down to the first and nearest support level. The bearish party is over. Okay, all right, so you see now, attention to the price. Now we are seeing, you see this top, a lower top, and there's an equal top here. In fact, that's why I draw this line, the turquoise one is still bearish. Here the price, it was here. We'll extend it now, price here now. Pay attention to my vertical line. At that point in time, again, we have a bearish. Okay? But now, this time, we are above the blue line. Okay? Though we have a bearish divergence, we are above the support level. How do we sell at the support level? We want to try to break below the support level, to retest the support level, and to turn around and to continue the movement to the downside. That's how we sell at the support level. I will be very careful here because I am above, okay, the blue line. Alright? The price went down a bit though. It went down a bit though. Okay? Alright? So when we are talking about divergence, some traders think that divergence means sell, bearish divergence means sell, bullish divergence means buy. That's the theory. The reality of the market is different. Traders must keep their eyes on the price and understand the language of the price to make excellent trading decisions. Here again, you see, the CCI was displaying equal high, while the price itself was displaying, okay, higher highs. We are in this zone here. If you like, we can highlight it again in this session. Alright, so equal high here, the price was here, higher high, equal high. It's a bearish warning. Price went down a bit to the simple moving average 21. It went down a bit to the simple moving average 21, which is the first dynamic support zone. And find a support here and turn around again. Here, third time, equal high. Price again here. Trader will challenge it. In fact, this first bearish divergence, where the vertical line is, was correct, but the price was not at the best place. The smart money want to sell at the best place. They want to sell at this level, the previous overbought zone, the best place. This is here, this level where my cursor is. That's where they want to sell. They saw the divergence, but they don't want to sell there. They want to sell. Whenever you see a divergence, ask yourself, where is the best resistance level? Because the smart money will prefer to sell there. So you see, that's why the price find it difficult to go down straight away. Blah 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 blah. Smart money say no. We know we want to sell, but we don't want to sell anyhow. We want to sell at the best place, and they brought it on the dot. You see, on the dot. Boom! They sold it down. All right. Remember, this is okay. In 2007, a bearish cycle is about to begin. A double top. The market also in a resistance zone. Same scenario. The S&P is now in the resistance zone. If we are in the election year, a bit of politics missing with the market, so do not bet on anything or take anything for granted at this point in time, okay? The price can go up or go down, okay? We must follow the price, okay? Here again we see the CCI display equal high. And the price itself, we are looking at NI source, stock, a peak. So we are somewhere here. This time we can see that the price was also consolidating on the weekly chart, blah 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 blah, equal high. It's the language of the price. Price went back to the base only to break above it again. Alright, so whenever we see a bullish divergence or a bearish divergence, when we see a bearish divergence, we can wait for the first, okay, lower high. When we see a bullish divergence, we can wait for the first, okay, a higher low. A bullish divergence does not mean buy, as you can see here. Okay, one must pay attention to the market itself and the price and understand the language of the price. Break below, retest, turn around, break above, retest, turn around. Bullish channel, rising channel, declining channel, horizontal channel, the market pattern first. Alright, so you see now, this is about, okay, the CCI, bullish divergence and bearish divergence. A divergence means a warning. Okay, when we see a bullish divergence, it's a warning. Alright, it's a warning that the price has a high chance to go up because the indicator is going up, which is moving the price. The indicator, we can see the indicator is heavier than the price because you need, okay, I don't want to go into this, okay. So the indicator is giving us a warning that the price has a high chance to go up. We must wait for the price itself to give us the first direct bullish signal. When we see the indicator going down and the price going up, it's a bearish warning. But you can see that this warning has been here for many months, okay, but the price did not give a direct signal so far. We are now on the edge. It break below the bullish channel. Okay, now it retests it here. If you receive a signal here, we can sell. All right, But all this time, though it was bearish, the price was contained again. Still, nothing has changed. Still in the rising channel. Okay. I hope you have enjoyed this video also about the CCI Reloaded Part 4 that you will put into use, okay, to make excellent trading decision. To purchase the CCI Pro, one must go to www.dayprotraders.com. Until next time, enjoy yourself and be very happy.